Hello traders, and welcome to section number 5.5 within the IPDATrader's private mentorship course, where we are going to be talking about trading plan, right? This entire section, guys, is going to be dedicated and focused towards building your own trading plan. Now, I've structured this section in a way that should make sense to you guys as you go and progress through the videos. So please do not get ahead of yourselves and just give it the time, work through the videos, and then ask questions if needed, right? So with all that being said, guys, we're going to get started right away. I've prepared a PowerPoint presentation just as some sort of introduction so that we can discuss some ideas, and we're also going to be dealing with a little bit of trading psychology, because trading psychology and building your trading plan goes hand in hand. So we're going to be discussing a little bit of that as well. Now, with all that being said, guys, let's actually get started and let's see what I've prepared for you guys. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video, and now into today's lesson. Enjoy the video. So the first thing that we're looking at now, and let me remove the drawings over here, is what is a trading plan and why do we need one, right? You need to understand this very well in order for you to actually go ahead and build one yourself that you can replicate and follow day in and day out. So a trading plan is there to guide you through the financial markets. Okay, that's the first thing that I've written over here, and this is pretty straightforward and self-explanatory over here, right? So in order for us to have complete confidence and sort of, yeah, pretty much confidence in what we're doing, we need to have a trading plan. And this trading plan that we're going to be building, essentially at the end of the section, is going to guide us through the financial markets. Reason being is because you really need to have the same approach to the market every single day. Okay, you cannot be sort of one day deciding, hey, I'm going to be trading support resistance, and the next day I'm going back to order blocks, right? No, that's not how it works, guys. You want to be sort of following the same approach to the markets every single day, right? You know that you have access to all the ideas and tools that we use to trade the markets. So what I'm trying to say is that you really need to approach the markets with the same ideas and tools in mind. Okay, every time I sit in front of the charts, I know exactly what I'm looking for, I know exactly what I'm expecting, and I know exactly what are the ideas that are going to be potential trades for me. Those are things that you really need to really understand extremely well in order to successfully trade the financial markets. Now, why do we need a trading plan, right? Why would I bother creating one? Well, that's pretty simple as well, right? A trading plan is nothing but a tool to protect yourself from yourself. And this is extremely, extremely crucial and important. Reason being is due to the way the algorithm is designed. Okay, we all understand that there is an algorithm in the market that sort of prices this different assets and stuff in, right? So in order to protect ourselves from ourselves, we need to have a trading plan, because that trading plan, right, and this is where it gets interesting, is going to prevent you from over trading, over risking, doing all this stupid shit that really makes everyone lose. Because once again, the financial markets are built on human greed and human inefficiencies. This means that it is extremely easy, right? And this is where we go over here. It is extremely easy to fall into the emotional state, right? Where you are just recklessly executing positions. And in order to avoid that, we need to build our trading plan, right? This is where the trading plan comes into play. Because if you have a bad day trading the markets, which is something that can easily occur, if you have your trading plan in mind and you're following your plan, you are just simply going to avoid crashing your account. If you don't have a plan or if you don't respect your plan, you are going to fail. I can guarantee you that. Let me repeat that. You need a trading plan, otherwise you are going to fail. Because the trading plan is going to protect you at all times, right? It's going to protect your drawdown, your downside, and it's going to protect yourself when you've actually done enough and done well for the day. So it really plays on both sides. You just want to be really careful with that, because once again, the algorithm will make you fail. Okay, the way the candles print up and down, now maybe a little bit down, right? All that sort of stuff is going to make you want to take trades, right? And most probably in the wrong direction. So that's why we need a trading plan, because having that trading plan is going to avoid that emotional state that you are going to be entering if you don't have a trading plan. So that's that, right? And another thing that is extremely important and that you need to understand as well is that preparation is 90% of your work as a trader. You really need to understand this very well. Execution alone is 10% of the game, guys. Everything else is your preparation, which is 90% of the work that you actually need to do. And within preparation, we obviously have trading plan, journaling, reviewing, reading, analyzing, all that sort of stuff that we know, right? Execution is just sort of 10% of the game. Everything else is preparation. And in order for you to be successful, you need to be prepared, because whenever you're joining the markets, you are getting ready for war, right? You need to understand that the markets are extremely corrupt, all that sort of stuff. So you want to be arming yourself with the most efficient tools that you can potentially have, okay? Now, the last thing over here, the odds of you, and this is pretty important, so please write this down. The odds of you hitting a profitable trades are much higher if you're following your plan, right? That's the bottom line, as every single trade that you are taking should come from logical thinking and plan following. Please take the time to understand this concept very well. If all your executions, and really do yourself a favor, go through your MT4, MT5 executions. I can guarantee you will find trades that make no sense, that once you review them, you're asking yourself, why did I take that trade? It makes no sense, right? But if you have that trading plan and all your executions come from logical thinking and plan following, you're going to have a much greater success rather than the other trader who maybe has a plan, but today he's not following it, maybe tomorrow he's following it again, and it's simply inconsistent, right? If you want consistent and predictable results, and this is key, guys, let me write this over here. If you want consistent and predictable predictable, whatever it is, right? I'm not going to be writing it over here. And predictable results, you need a trading plan. That is going to be sort of provided by your trading plan over here. So understand that very well. The only way to achieve consistency and predictable results is by following the same plan day in and day out. So that is really the first slide I wanted to discuss with you guys. So you can see a couple things that are important, right? We need a trading plan because that is going to protect yourself from yourself. You need to a trading plan because it's going to guide you through the markets day in and day out. And you need to understand that it is extremely easy to fall into the emotional state of being while trading the markets, because really there's nothing wrong with you, but rather the algorithm is designed for you to feel that way. So in order to protect yourself, you have to refer back to your trading plan, because that's going to absolutely protect you, especially if your trading plan includes some sort of risk management criteria. Okay, that is alone, I can guarantee you this, risk management is the most important thing. That is 70% of the game done over there if you can master risk management. Okay, so with all that being said, guys, let's continue working through the PowerPoint. Smooth all that. Let's see what we have over here. And this is a pretty interesting topic, to be honest, and we're going to be discussing that. So traders, as I said before, whenever you're coming to the markets, you are literally going to war. You need to understand that. And now you may be asking yourself, well, who are you battling with? And this is where we come and discuss this idea over here, okay? You need to understand your opponent very well. And there's a couple of those, okay? The first one, can see to the left, this man, in case you don't know, he is Jerome Powell. He's the president of the Federal Reserve in the United States, and he is a very, very influential and powerful man. Okay, essentially, the message that I'm trying to convey over here is pretty simple. If this man says something, the markets react accordingly. If this man walks around, raises his hand, takes a shit, whatever it may be, the markets will act and react accordingly. You need to understand that very well. So he is essentially your opponent, okay? One of them at least. Now to the right, I believe this is a Goldman Sachs trading floor, and these are the guys that are actually managing and trading the algorithms. So essentially your opponent once again, right? These two criteria, or these two different sides, represent your opponent in the market, not another retail trader, not anyone else, rather these two different scenarios over here. Okay, Jerome Powell, he's pretty influential and powerful man, so he has the ability of moving the markets. He is responsible in regards to how many dollars print each day, each week, each month, each year. He's sort of the responsible of that. And to the right, once again, we have Goldman Sachs, which essentially are those people that have access to the algorithms and sort of move it as well, right? So at the end of the day, these are the two big different guys that benefit out of everything that happens in the market, and out of the 90%, 95% of retail traders who lose. So with all that being said, these different ideas, I'm not going to be making this too long, but I wanted you to make sure you understand who you are fighting with, okay? It's not your retail friend, it's not anyone else, it's just this type of information that is important. Okay, so let's actually continue over here and let's talk a little bit about the beauty of our game, okay? Because we do have some positives in regards to what we do in the markets. So let's remove the drawings over here and let's start discussing different ideas once again. So what you need to understand is that within our game, which is essentially trading, you need to understand that same difficulty applies across all different capitals. Okay, what I'm trying to say over here is pretty simple, and let's actually do an example. So if you have a $100 account, right, it is as difficult. Making $1 over here is as difficult as having a $100,000 account over here and making 1K. So what I'm trying to make you understand here is that the market does not care about you in particular, okay? It is the same difficulty to make $1 with a $100 account as 1K with a $100,000 account. So that's beautiful for us, right? As retail traders, because at the end of the day, once you've mastered trading, you can trade and exploit size as much as you're capable of doing, because the game is going to be the same. It's not going to change all of a sudden now that you're trading a bigger amount. No, that's not how it works, guys. It's the same difficulty across all capitals, okay? So that brings us to the next point, which is essentially this one over here. Your opponent never changes, okay? It's always going to be the market. It's always going to be repeating. And this is where repetition and discipline comes into play. It's always going to be repeating the same behavioral patterns, okay? You need to understand that very well as well. It's not going to change. It's been doing the same thing for years and decades, and it will continue doing the same thing for more decades to come. Okay, so understand that very well. Your opponent is static, he never changes. Now, trading is a you versus you once again, right? Even though you understand who you're fighting with, as discussed in the previous slide, essentially you should be battling with yourself, and that's it. Okay, you should be trying to be the best version of yourself as you can be, and working towards that, right? Not fighting with another retail trader about this or about that. No, you should be focusing on yourself. Now, that doesn't mean that you cannot have a community you communicate with, you share ideas with. No, that is actually pretty beneficial for everyone. But what I'm trying to say is that you're not in competition with anyone, okay? Next thing over here, flexibility. This one is pretty obvious, right? We have the flexibility of entering the market whenever we want. We have the flexibility of leaving the market whenever we want. And that's actually beautiful because, hey, you can find something that suits your lifestyle, right? If you work a full-time job, you don't have the ability to sort of look at the candles print side by side, right? During, let's say, a London session, then that's fine because you have the flexibility to, let's say, okay, I'm going to be trading with a daily 4-hour chart, maybe an 8-hour chart, and I'm going to be looking for moves based around these time frames because that's what my lifestyle allows me to do, okay? Now the pretty obvious thing over here, the market will never reject opposition, and this is where we go back to the capital thing, right? They don't care how big are you, how big or small are you trading. They will always accept your trade, right? The market will never reject a position. Another beautiful thing about our game is the ability of managing risk, which is crucial as written over here, right? And as you can see, I've written a couple things over here, which essentially involves yeah, pretty much essentially covers the idea of risk management once again, right? You should know where you are in the year in regards to, should I push now in terms of my risk? Should I hold back a bit, right? For that reason, we have time of the year, right? You don't want to be pushing too hard. As an example, in December, where we're approaching holiday seasons and things may not move as cleanly and all that sort of stuff, right? Same goes for the day in the month, right? You should understand that your bread and butter, where you're really going to be making your profits and benefits most of the times, and if you journal and actually go through data, you will find out that, hey, my best days are usually in the middle of the month because that's obvious. That's where the markets are flowing the best, things are moving as supposed, and everything is sort of running smooth, right? So you want to be pushing in terms of risk, maybe during these days of the months over here, right? The 12th, 13th, 14th, right? Sort of in the middle. And maybe not, and maybe you want to be reducing your risk at the beginning of the month, right? The first, the second, the third, and the end of the month, sort of the 30, 29, or 29th, whatever it may be, right? You just want to be always paying attention to where you are in the markets in terms of timing. That's extremely crucial. Same goes for the week, right? You want to be generally pushing on Mondays and Fridays. You want to be looking to make your money on Tuesday, Wednesday, Thursday, because that's where the markets are going to be flowing and moving the best. Now, the last idea over here, and I'm not trying to sort of sound rude or harsh, but if you have the victim mentality, you need to stop it because that's subjective and that is not the case at all. Okay, the market does not care about your one lot retail stop loss at all. Okay, they are looking to take out smaller banks and institutions that do end up following retail logic over here. So you need to stop with the victim mentality every time you hit a stop loss, sort of, oh, they're watching me, they want me to fail, it's not possible to win, they just want me to lose. No, that's not the case at all. They do not care about your one lot or 5 lot 10 lot, whatever it may be, retail stop loss. They're looking to take out bigger players in comparison to us, but smaller players in comparison to what they are, okay? So smaller banks, smaller institutions that do trade and follow retail logic. Let's move on to the next slide over here, which essentially we're going to be discussing the idea of asking questions, because I've seen this issue come up quite a bit. So I wanted to address this, and even though this is not directly correlated to trading plan, I believe it is still important to assess this idea over here. So the idea of asking right questions and avoiding wrong questions. So you can see to the left here, guys, I've listed some of the wrong questions you should not be asking anyone, right? What do you think of this pair? Well, I don't know. What do you think of it? We're both humans, so we're most likely going to be having different ideas on it. So how is my perspective going to help you with your plan? You need to follow your plan. And if your plan tells you about this specific pair that now you need to take a buy, then you're going to be taking a buy regardless of what I believe. And think of it, right? At the end of the day, we're individuals, we're humans. Trading the markets is an art, it's subjective, right? As I've said plenty of times, there is no right or wrong way to really read a market. It's up to interpretation at the end of the day, okay? Another example of a wrong question: should I take this trade? Well, I don't know. Should you take it? Are you following your plan? Every time you ask me this question, I will tell you, are you following your plan? That's going to be my answer. And once again, please, I'm not trying to sound rude or anything of that sort. I'm trying to help you over here. Okay, so avoid these types of question over here, right? What time frame should I work with? Once again, follow your plan. What is your lifestyle like? How many hours can you spend in front of the screens, right? These are questions you need to ask yourself if you really want this to be answered, okay? Not asking me is not going to be beneficial in that sense, okay? So understand that. How many trades should I take? Follow your plan. That's the answer right there. Sending a lower time frame chart without high time frame narrative and asking for an opinion. This is absolutely crucial, guys. Please do not do this. Do not send me a chart asking for my opinion if all I can see is the lower time frame chart without any sort of higher time frame narrative and perspective, because I'm simply not going to be able to give you some sort of good and interesting answer, right? I don't have enough information in that sense. I need you to show me what you're thinking. What is your idea behind the trade? Why are you taking the trade? Where are you looking at? Where do you want to take profit? Where do you want to sort of be out of the position, right? I need more ideas and context. Otherwise, I will not be able to help you. Now, how much percentage should I risk? Once again, goes back to your risk appetite, risk tolerance, and whatever your trading plan is telling you at that point. So please understand that if you're asking questions of this sort, this is not going to be beneficial for you and for me, okay? I'm going to be wasting my time, you're going to be wasting your time. You want to ask critical thinking questions, okay, where you actually present an idea and then ask for whatever you think of it, okay? That's going to be much better rather than sending a lower time frame chart without any sort of high time frame narrative where I cannot read and see anything occurring, okay? So please understand that. Once again, I'm not trying to sound rude, I'm trying to help everyone out over here. So let's move to the last slide of this quick and brief presentation, which are essentially right questions, right? What are things you can ask and that actually will help you in your journey? Well, something along the lines of this, right? Here's my thought process behind this trade and pair. Here's what I'm looking to do with this trade. Do you think my analysis and ideas make sense? Well, that's a great question to ask. And if you provide me with the right information, I will give you a good answer, right? Doesn't mean we need to necessarily agree on the fact of, on the trade idea or analysis or whatever it may be, but you're showing me that you have critical thinking skills and that you actually have an idea behind what you're trying to do and accomplish. So that's great. Feel free to ask those things, right? Prepare yourself whenever you're trying to ask something. Really take a second, think twice before you ask a question, and sort of prepare and say to yourself, hey, this is what I'm presenting you. Does that make sense or not? And then we can have a chat and discuss all that, no problem at all. Another thing you can ask, question regarding technicalities, right? Mentorship content, absolutely. Feel free to do that. I'll be gladly trying to help you, right? If you don't understand a concept very well, let's say you're struggling with POI identification, whatever it may be, I'm going to be gladly trying to assist you with that and helping you out, okay? So those things are welcomed and valid. So keep that in mind. Asking for feedback on running closed positions, right? That is also great. Feel free to do that as well, right? You've taken a trade, you've maybe taken a loss. Instead of suffering in silence, why don't you just speak up and tell me, hey, this is what happened. This was my idea. It didn't work. What do you think of it? Do you think it was a good trade? Do you think should have avoided it? Whatever it may be, right? But please do not suffer in silence. Speak up and try to seek help, because that's why you're here. You're paying for it. You have the right to do so. So exploit that and really understand that. So with all that being said, guys, as I was saying before, I'm not trying to sound rude, but I really do hope this provided you with some insight and information. Do not worry. I understand that the section will be dedicated to trading plan, so we're going to be discussing that very in depth, but I still wanted to give you some sort of trading psychology ideas as well, because that's really going to help you create your own trading plan, right? And as we said, we're going to be creating one from top to bottom, so do not worry about that. Now, with all that being said, guys, that is going to be the end of the first video within the trading plan section. And in the next video, we're going to be discussing all the ideas, and yeah, pretty much all the ideas that you need to include within your trading plan and parameters. All that sort of stuff is going to be discussed in the second video, and in the third video we're actually going to be creating a trading plan together, okay? So do not worry, do not stress, this is just the very first video within this section. So with all that being said, guys, thank you very much for watching and listening, and I will see you guys in the next video, where we're going to be continuing talking about trading plan and building one. So see you guys there.